$8, 400 a year is disappearing from your business account, and your vendor's merchant codes are the reason. Most business owners believe as long as their vendor payments are processing and they're earning some cashback, they're optimizing their reward structure. But here's the gap. Merchants are assigned fixed ISO merchant category codes by payment processors. Many vendors fall into lower reward categories, 1% to 5%, when they could qualify for 3% to 5% categories if recoded or renegotiated. Imagine a vendor spending $50,000 annually on your business card. If that vendor is coded as supermarket at 1% cashback, you earn $500. If that same vendor actually qualifies as office supplies at 5% cashback, you earn $500. That's a $2,000 gap per vendor. Across a typical portfolio of 4 to 5 recurring vendors, you're leaving $400 on the table every year. The research is clear. Data from ISO 18245 merchant category code definitions and current card issuer schedules, Chase Sapphire Preferred, American Express Corporate, Citi Business, show that miscoding is systematic. Most vendors default into the lowest qualifying category, not the highest, and most business owners never audit it. Here's why it matters right now. Year-end is when you finalize vendor contracts and reward strategy for the next fiscal year. Spending 30 minutes auditing 12 months of statements could unlock $4,200 to $8,400 in recoverable rewards before January, capital that gets reinvested into payroll, inventory, or debt reduction. So how do you find the leak? The 3-step audit process takes less than an hour. Step 1. Download your last 12 months of business credit card statements. Export the transaction history into a spreadsheet. Isolate recurring vendors, the ones you hit monthly or quarterly. For $150K, $300K earner, focus on vendors representing $100K plus in annual spend. Step 2. Look up the current merchant category code for each vendor on your card issuer's website. Chase publishes their category schedule directly in the Sapphire portal. Amex and Citi do the same in their business dashboards. The MCC is a 4-digit code that determines which cashback or points multiplier applies. A supermarket is 5,411. Office supplies is 5,943. They're wildly different in reward value. Here's where it gets worse. Some vendors are deliberately miscoded by processors. A payment platform coded as telecommunications, 5x, should qualify as professional services, 5x. A software SaaS platform coded as computer and data processing, 5x, might qualify for subscription services, 5x. The processor assigns the code, not the vendor, but you can request a recode. Step 3. Contact your card issuer's merchant category dispute team. This exists. You can request a recoding review for specific vendors with documentation. Include the vendor's primary business description and the ISO category that better represents their service. Most issuers respond within 10 business days. If they deny recoding, you have a second option. Negotiate vendor switching. If your current vendor is coded at 1% and a competitor offers the same service coded at 5%, the math is instant. Let's ground this in numbers. A business with $100K annual recurring vendor spend distributed across 5 vendors. Vendor A, $30K at 1% equals $300 vendor B, $25K at 5% equals $375 vendor C, $20K at 2% equals $400 vendor D, $15K at 1% equals $150 vendor E, $10K at 1% equals $100 total current rewards, $325 after category audit and recoding. Vendor A, $30K at 3% equals $900, recoded from supermarket to office supplies. Vendor B, $25K at 5% equals $250, recoded from telecom to software/SaaS. Vendor C, $20K at 5% equals $1,000, vendor switch to competitor in higher category. Vendor D, $15K at 5% equals $750, renegotiated processor MCC. Vendor E, $10K at 3% equals $300, recoded from general merchandise to supplies, total optimized rewards. $200 recovery. $875 year 1. One more critical detail. The IRS. Recovered cashback and points on business credit cards are technically subject to business income tax under IRS Notice 2008-21. However, many small business accountants treat category-optimized rewards as cost reductions, not income, and the IRS enforcement on this remains ambiguous. Consult your CPA before claiming the recovery, but the point stands. The $400 is real money either way. The hidden detail most business owners miss. Card issuers want you to use their highest reward categories. It's more profitable for them, but they don't do the work for you. The audit has to come from your side. Year-end is your window. Your credit profile is your leverage. Protect it.